All through last week, S&P 500 general stock market has generally been going sideways. So what's coming next? Are we breaking out of this bull flag, or does this mean that turnaround back down to recent lows is upcoming? Let's talk about the stock market, and welcome to myfinancesteacher.org. In my opinion, it's more likely that the stock market is forming some sort of a bull flag. After all, after that low on the 20th of May, we have already seen the markets rally by nearly 10%, so it's not uncommon for the stock market to consolidate for a few days into some sort of a bull flag before continuing higher. Additionally, all through last week, S&P 500 was into that resistance zone formed by several of the recent lows. That's in March, somewhere around 4160, and stretching down to 4100. That's from early May lows as well as mid-May highs. So anywhere between that 4100 to 4150 is where we see some sort of a resistance formed by previous highs and lows. And at the same time, that's exactly where the 38% Fibonacci retracement is as well. And as I mentioned many times in my previous videos, the retracement numbers that are most likely to play out some sort of a role are the 62%, 50%, and 38% retracement levels. So far, by the end of last week, the daily cycle in S&P 500 has been going on for 14 days. So that is a 14-day long cycle so far. And yes, it's already long enough to top. So yes, there is a chance that stock market just goes down from here for the continuation of the intermediate cycle. But in my opinion, the chances for that are not extremely high. I would give that perhaps a 30% chance, with a 70% chance that the stock market still has a bit more momentum to the upside before the top in the daily cycle takes place. Usually, even these bear market rallies do tend to retest the 50-day moving average, so perhaps a bit of a rally into mid-4200s on S&P 500 at least, or perhaps even slightly beyond that up to the 200-day moving average, just above 4400. After all, the recent lows in mid-May came with extremely pessimistic markets, meaning that there is still some momentum to the upside before the market sentiment improves, before the blood is not on the streets anymore, so to speak, and some sort of a top might actually form. Talking about these market sentiments, let's have a look at the optimism index. So here's the optics for S&P 500. As you see, back in mid-May, it reached significant lows, just nearly as low as the optimism was back at the pandemic drop. So some sort of a bounce out of those extremely pessimistic markets was to be expected. We have seen that bounce. The optimism index has reached above 40. So again, as I mentioned, there is a chance that this has been enough of a bounce and the markets are going to continue down for the rest of the intermediate cycle. Again, it's not very likely, perhaps 30% chance. With my own allocation, I would like to wait a little bit longer. I don't want to wait for too long, as I think the risks are pretty high that the intermediate cycle is generally going to slide down. But within the ongoing daily cycle, perhaps there are a few more days, maybe a couple of more weeks of some upward momentum. I will wait for the optimism index to reach somewhere around 50 when I will start reducing my allocation. And of course, perhaps it's a good idea to start using those stop losses just in case if the stock market does turn around and drop back down. And on the optimistic side, yeah, there is a chance that stock market just continues to chug along higher to retest previous all-time highs from late last year before some sort of a recession takes place, as energy prices are quite expensive. I've talked about that in one of my recent videos. But that optimistic scenario is not extremely likely either. As you see, the sentiment, for example, over the last year or so has generally been sliding downwards. All of these local highs on S&P 500 come with relatively lower and lower highs on the optimism index. So perhaps the next high might again come with a relatively lower high on the optimism index. That's why I want to reduce my position significantly once this optics comes up to the neutral level around 50. And a similar picture is on the smart money, dumb money confidence. Smart money here are the large institutional players. Dumb money here are the smaller traders. Smart money confidence is shown by this blue line. As you see, usually whenever the smart money confidence is very high, that usually aligns with some sort of a local low. And dumb money confidence is shown by this red line. And again, whenever the dumb money confidence is at the gutters, when the dumb money confidence is near zero, when the general traders are extremely pessimistic, when the blood is on the streets, that's when we see some sort of a local low as well. And that's exactly what we saw back in mid-May. Smart Money Conference was pretty high, close to 80%, 0.8, and Dumb Money Conference was pretty low at 0.11. So since then we have been observing some sort of a bounce lasting for a couple of weeks. And again, caution tells me that there is a chance that that's enough of a bounce before the stock market continues down. But again, I do think that it's more likely that the bounce continues for at least another short while. And again, I will start reducing my positions once the Smart Money, Dumb Money Conference enters this box somewhere between 50 and 60. Smart Money Conference dropping below 60% and Dumb Money Conference rising above 50% will be a bit of a cautionary sign. So in the short term, perhaps a bit of a bounce continues in the general stock market into the ongoing daily cycle. But in the intermediate to longer term, I think caution is advised in the stock market, as I've discussed in this recent video from 25th of May, how a confluence of factors is indicating that a recession is likely, and those same factors came together in 4 out of the last 5 recessions. If you haven't seen that video, I strongly suggest checking it out. But in the meantime, before you go, make sure to hit that like button and subscribe to the channel. Have a productive Monday. Bye-bye.